Guys, I'm back here again with another one, and in this video I'm going to be talking about the instrument, which is step index. It's been a very long time that I think I've analyzed step index on this channel. Maybe I've never analyzed it, but I'm going to be talking about what we have on step index at the moment, so for us to see what are the things that we could derive from it. Is there any opportunity for us on step index? So let's get right into it without any wasting of our time. So the approach that we use always, that is our top-down analysis approach. That's the approach we always use in order to analyze the market. So looking at the monthly time frame, we can see that the last month wasn't no candlestick confirmation here for us, or candlestick pattern that we always look for, maybe a bearish engulfing candle or a bullish engulfing candle or morning star, evening star, all these candlestick patterns. However, there's always something that we can use if we do not have a candlestick pattern that we could use, and that is using the immediate candlestick that closed for the month. So looking at the candlestick that closed for the last month, we can see that is a bearish engulfing, is a bearish candle, and this bearish candle is a very strong bearish candle, as we can see. So this is indicating to us that last month was very strong sell. There are a lot of sellers in the market. They did not take anything for granted with the buyers. They sold their instruments a lot. And looking at the price action of this market since it was introduced on bearish, we can see that the price action has always been bearish. So seeing a bearish engulfing, a bearish candlestick, a strong one at that, last month, which was December. So we should be expecting that January is supposed to continue the bearish trend. However, we are seeing, if we go to lower time frame, maybe a daily time frame, we can see that the market actually sold. However, the market is now going back up. So I would take this as a retracement. Why? If we look at what we have on our weekly time frame, we can see that this market has given us a break of a structure, which is or a continuation of a trend, which is breaking the lower zone, which was the initial zone that this market was in, let's say last year. Yes, in last year. So now this year, this market has broken the zone. So what should we be expecting? Should we be expecting that this market continue its trend to the downside? In my own opinion, I believe so, that we should expect this market to continue its trend to the downside. And that's what I'm looking forward to at the moment, because one thing about the market is that the market always moves in bearish or bullish moves, and sometimes in a ranging move. However, looking at what we have, we always know that whenever we hit a resistance, it's either we break that resistance and come back to retest it and continue the trend, or we reject it and go back again. And looking at what we have here, we can see that our support has been broken. Our support has been broken. And looking at our support being broken now, we should be expecting what? The market to come back to retest that support. And if we see that the market was able to reject the support, then we can continue the trend to the downside. And that's exactly what we are seeing at the moment. So in my own opinion, I will be looking at this market in terms of sell. That is, I'm expecting the market to come back to this zone, which is the weekly zone. And as you can see that we have marked out our high probability zones on this time frame, which is on a weekly time frame. So I'm expecting the market to come back and retest this support zone or this demand zone at the moment that has been broken. And if this demand zone is rejected, and we have a candlestick confirmation, which is a bearish engulfing candle or an evening star with all other confluences, like maybe a break in a counter trend line that I'm going to use as a tool to support my bias, and also break of structure, because at the moment, if we go to our daily time frame, we can see that this market is making bullish move at the moment. So if we have a break of structure given on a lower time frame, giving us that this market is going to sell, why am I not going to sell? And I have marked out the zones that I am expecting this move to sell from, and that is around the zone which is 8,000. So what are the ways for us to enter this market? On a daily time frame, if we draw our trend line, we can see that this market, we can't see any place for or any connecting places that we could draw our trend line. However, if we go to lower time frames, like maybe an hour time frame, we can see that we can be able to see touch of where we could place our trend line, and that's what I'm going to do. So I'm going to be watching this market to do whatever it wants to do. So when I'm going to be interested in this market or this instrument is when it reach that zone. That is when I'm going to be interested in this market, and once it reach that zone, I'm going to be looking for opportunity with this trend line that I've touched, that I've drawn. Is now going to be a counter trend line for me. So once I see a counter trend line break with a candlestick confirmation, I'm going to sell this market, and my TP is going to be around 7,730 thereabouts. So that's what I have for you guys. I hope you enjoyed the video and I hope you like it. If you like what you have seen, please do not forget to give us a thumbs up, comment under us, kindly subscribe to our channel, and also do it to share this video to people, because I know that some people are going to be needing this video. It might not necessarily be for this instrument, but at least they're going to see one or two things that they have learned in order to perfect, or in order to be a better trader and someone who analyzes the markets for a good trade. So peace out.